Mark Matthew joins us now. Let's take a conversation forward and understand his view of market India and the macros. Mark, good morning. Thank you for joining us. Mark, just when it appeared that inflation or worst of the inflation print was behind us, out comes the CPI data and the consumer data, which is clearly indicating that while the economy is slowing down, both for India and for the world, the inflation is stubbornly high.
Well, the first thing I would say is that January numbers are often subject to very big downward revisions. And this year could be one of those years where, for whatever reason, the numbers do get revised down. I also think that the inflation is high, but it is slowly coming down on a year-on-year basis. And so I don't think it's enough to really cause the markets to collapse. But I do think it does mean that the rates are still on the uptrend. So the Fed funds rate, which is currently at 4 and 3/4, could go to, let's say, 5.5. And I think that the market can live with 5.5% Fed funds rate because the economy is so strong.
Mark, but if interest rates they continue to nudge higher, it will have impact on valuations. It will have impact on how do you look at terminal value. It has got everyone thinking that if I'm getting 5.5% return in the US bond market, about 8.5% return in good Indian corporate bonds, do I really need to chance my arm by buying into equities where valuations are not exactly very cheap?
Yes, I agree. That's true. So there is now competition for returns in the government bonds, which hasn't been for many years. But I still think that, number one, in an inflationary environment, you want to own assets. And stocks are assets, or they are securities that are backed by assets. And number two, I do think that the inflation rate will moderate during the course of this year. The fact that January has started higher than the market had anticipated means that the jury is out. But I don't see a big spike in commodity prices. I think that the housing component of the inflation indices will start to decelerate because we can see the real-time data in the housing market has been softening since June last year. So I still think that we can have a decent year for the S&P, perhaps even a very good year. But we are entering into March, April, May, which is seasonally weak time of the year. And, the stocks go up and down. So the fact that we're up 3.5% this year, actually, if you annualize that, it's over 20%. So we shouldn't be displeased by the performance of the S&P so far this year. But it'll be choppy. It'll be choppy, I think, until there's more certainty that inflation is on the decline.
Mark, wanted to understand how you viewed this entire Adani Group saga and whether you believe that the worst could be behind us, although the stock prices don't seem to be suggesting so. They continue to fall on a daily basis.
So short sellers, this is the way they make money, by screening vast universes of securities and trying to find anomalies in the financial statements of various companies and then highlighting those after they've obviously gone short the securities in some way or another. It tends to make for very, what's the right word, emotive reporting and behavior on the part of the media and the market, because obviously the accusations are that some kind of malfeasance has occurred. And so I guess I'm just trying to paint a picture where what has happened is something that's happened in many other markets. And sometimes the accusations prove to be incorrect, and sometimes they prove to be correct, and sometimes it's inconclusive. But the market goes on. And I mean, here in Singapore, about 10 years ago, we had similar allegations made against two very large and prominent companies. And well, the Straits Times Index is still here, ticking along. The good quality companies are still doing what they're doing and producing good dividends. So I think what I'm trying to say is that this kind of thing will gradually move into, well, this particular event will move into the rear view mirror. I suspect it already has for the broader market. And the market will begin increasingly and focusing on the economy, inflation, and things like that.
What's the sense that you're getting when it comes to IT as a sector, given what we've seen play out in the year gone by vis-a-vis the banks? What is it that you're expecting down the line over the next few years for IT?
If we look at what happened to the technology sector after the dot-com bubble burst in the year 2000, then everything went down initially. But then what you had approximately starting the year 2002 was the companies that were profitable, their share prices came back strongly. And the ones that were unprofitable, their share prices stayed down. And so just extrapolating that to today, I suspect it'll be something similar where the companies with strong cash flows and secure business models will see a share price recovery, and those that don't will not.
Mark, Indian markets have not given any returns in last 18 months, even though India in a sense has been a very promising story. Now for bull, I would say, okay, 18 months means consolidation is over, time to get ready. But for someone who's realistic, would say that, okay, a market like India is not giving any returns, is it time to move on? Which argument do you think right now deserves higher weightage?
Everything's relative. So I think 18 months on that basis, I think it's probably still an outperformer relative to the, NASDAQ. We were just talking about technology, for example, some of the big winners of the previous decade. The nature of stock investing is that there are lots of up and downs. There are also just sort of sideways dull periods too. But over the long term, you make better returns in stocks than in most other assets. And that includes in India. You would have compounded 9% return over the last 30 years if you'd been reinvesting your dividends. That's in dollars, by the way. So obviously in rupees, it would have been much higher. I think the economy is in good shape. I think earnings will be strong. I see no reason why the market can't do well this year, even though it's down sort of 3%-ish so far this year. It's just the nature of the equity market that it does, it doesn't always go up in a straight line, but over time it does tend to go up. So it doesn't bother me the fact that it's been flat on an 18-month basis or that it's down a little bit so far this year.
Mark, appreciate your time. Thanks very much for joining in and sharing with us your outlook on the Indian markets.